morning. Joining us to tell us where you should be putting your money in 2010 is Willem de Vijlder. He is Chief Investment Officer at Fortis Investment Management. Willem, thanks a lot for joining us. So how do you see 2010 in a nutshell?
Clearly more difficult than 2009. It's a market timing market. The market has already bought the recovery. We need to see confirmation now in terms of top line that indeed these expectations have proved to be justified. So we will see a positive return market. We expect that they won't be very dramatic, and we will also see some multiple contraction. So it's kind of a less upbeat than we have seen since the start of March this year.
Yeah, we're beyond that so-called sweet spot, though, for equities, aren't we?
Yes, and it's always like that. Markets, they look ahead to the business cycle to identify where the trough is. That has worked again this time. And then as you see the early turnaround, you have the discounting mechanism kicking in and prices shoot up. The multiple, price earnings multiple expands. And then analysts kind of, certainly at the top-down level, get used to seeing good data. And what we are seeing now is that we are gradually moving to an environment where, although the data continue to be good, they have become less surprising than in the past.
Yeah, but you're still waiting here for confirmation that we are past the worst. I think that you said in your recent research paper that you're seeing whether the patient can stand on his two legs without crutches. So is that just, at the moment, a reference to these sort of exit strategies that we need to have in place?
Yes, we have, of course, had an extraordinary amount of policy easing. I think the most extraordinary amongst the extraordinaries being the UK economy. And in a combination of aggressive fiscal policy and aggressive monetary policy, and sometimes also an aggressive weakening of the currency. That is a pretty abnormal environment. It was very much needed. What we need to see, of course, is if you take away some of these positive impulses, whether the patient will indeed be able to stand. I think the exit strategy is, of course, going to be the buzzword of 2010. It is already the buzzword at the end of 2009. It will continue to be. I think it's a bit overdone, the emphasis on that, because I think it's more of a microeconomic issue relating to whether certain banks will get all the funding they require, and less of a macro issue. I think at the macro level, what we really need to see is that we have a topping out of the unemployment rate, and that we have the credit growth kicking in later in 2010.
William, what about, of course, the US? We've seen the earnings season. We've seen a gradual return of some of the top-line growth there coming through. That's going to be essential for a sustainable recovery, surely. And how is the demand side for you?
I think the demand side is still characterized by a very price-sensitive consumer, and the labor market environment, although it is improving at the margin, when you look at the initial unemployment claims, it is still a very challenging, a very difficult environment. I hope that Larry Summers' forecast that we would have positive payroll growth as of April next year will prove to be the right one, because we desperately need it in view of the positive impact that would have on consumer disposable income. Putting all these things together, the prospect of fiscal tightening, plus the jobless recovery type of recovery, as we have been used to seeing in previous recoveries as well, that pushes us to expect that the growth environment will be a very weakish one, and hence that we should not expect tremendous equity returns either.
William, thank you so much for joining us. Willem de Vijlder there. He is Chief Investment Officer at Fortis Investment Management. Have a fab Christmas now.